These ETFs have been buying more than 100% of the supply in 2024. They bought more than 100% of the supply in 2025. The price hasn't gone up that much because people have been filling the gap by selling. Eventually, those sellers will run out of ammo. And that's where I think we'll see Bitcoin do the same thing gold did last year, which is hit this sort of parabolic increase. There's an altcoin season in precious metals right now. They were queuing to buy gold. Now they're buying silver and platinum and palladium. They've moved on to the altcoins. They'll eventually cycle back around to Bitcoin. Bitcoin is the king. It at least has a place at the table alongside gold. I think they'll exhaust themselves on this precious metals skew. But you have to think of them, if you're thinking of them, you have to think of them in late altcoin season. That's actually where the precious metal investor is today.
For most of Bitcoin's history, investors have obsessed over round numbers. $10,000, $20,000, $50,000, and now $100,000. These levels matter not just because of price, but because they shape psychology, behavior, and long-term adoption. For years, Bitcoin's narrative revolved around one simple question: will it ever hit $100,000? That number became a psychological anchor, a round, memorable milestone where many investors expected heavy selling. Matt Hougan acknowledges that this level still matters. There is real selling pressure around $100,000. Some investors will take profits, some funds will rebalance, some long-term holders will exit positions they've waited years to unwind. Before we go on, just a quick reminder: liking the video, subscribing to the channel, and commenting helps this reach more people who care about Bitcoin and macro trends. Appreciate the support.
For a long time, we were like, it goes to 100K because 100K is such a nice round number. Once we break sustainably above 100K, what's the next big stopping point? I don't know. Is it 250? Is it 500? Is it $1 million? There's not like an obvious level at which people will sell once you get beyond 100K. I think there is still interest in selling around 100K, so I don't want to belittle that. But I think once you get beyond that, where will it really stop at 200K? That's sort of a random number. Where will it stop? I'm just not sure. Around these levels is a tolerable level of volatility for what it's worth. We're now similarly as volatile as the largest tech stocks. That's something that institutions can stomach. They couldn't stomach 60 vol. They can stomach 30 or 40 vol a lot better. I think my confidence in Bitcoin's price trajectory changes as my duration increases. Where will it go next month? I actually don't know, right? I mean, maybe I don't know. There are forces that are positive. There are forces that are negative. Who knows what will happen with the Clarity Act? You could wake up to a crazy headline at any moment. But as you pan out to like 3 or 5 years, I would just tell people to keep that in mind. Do you think there will be more liquidity in the market or less? Do you think there will be more money printing or less? Do you think the Fed will be more independent or less? Worried more about debasement or less? From my perspective, as you pan out to like 3 to 5 years, those negative economic things get really frightening. And I think everyone wants some hedge exposure. So maybe for the friend who doesn't have any in the market, now is a good time to start to leg in. Often, if you're new to the market, dollar cost averaging over a period of time is a way to reduce the risk, because you don't want to buy today and have it drop 20% and panic. You want to buy today. If it drops 20%, you want to be excited to buy more. So maybe a dollar cost averaging approach is sort of a familiar technique that can help people gain exposure. One thing I always tell people when the price goes up, I was like, write down the price at which you'll buy. If it's at 120K, write down that you'll buy it when it gets to 100K and put it on your computer with a little post-it note. And the reason for that is when the market pulls back, you never feel excited to buy. You only feel excited when the market is ripping. But of course, the best time has been historically when those pullbacks occur. So you need some sort of discipline that makes you do that. Could be dollar cost averaging, could be a monthly contribution, could be writing down a sticker price. But you do need some way to take the emotion out of it and just approach it, rationally and ruthlessly if you want to succeed in this market, because otherwise it's hard. It's just hard. The emotions are really big as the price moves. Look, I think the risk-adjusted return outlook for Bitcoin is better than it's ever been. Obviously, the absolute return is not, right? Obviously, we wish it were $1 and we could buy it and ride, but there was just so much risk when Bitcoin was $1, right? The probability that it succeeded at all certainly felt from an outside perspective very low. There was technical risk and government risk and regulatory risk and all these risks. It could have just been banned by governments globally. That was possible. Now, many of those risks have been removed. And so, yeah, 50% CAGR is not 500% CAGR, which maybe we were looking at a handful of years ago. But you have to take the other side, which is the risk has come down so you can have a more meaningful position. You mentioned Bank of America, 4% position, right? We didn't talk about 4% institutionally until a year ago. Everyone talked about 1% or get off zero or just own something. 4% was like a crazy degen exposure for an institutional investor. Now you have the largest investors in the world casually throwing out 4%. And the reason is the risk is lower, right? So that's the flip side of that 50% CAGR. The risk is lower, so you can have a larger allocation and you can still have the same impact, if you have the liquidity.
Do you think at some point, all those whales they've been selling into the idea of the cycles, do you think they're coming back? Will we see the reversal at some point kicking in?
Yeah, I think you'll see the reversal of some of those for sure. Many of those whales have made life-changing money, and they may want to exchange some of that for life, for houses and colleges and these sorts of things. I think, look, that's all legitimate and fine. But will some of them come back around and buy? Absolutely. Right? If they're believers in the 4-year cycle, they'll be piling in at the end of 2026. So, will those ultimately be a source of demand? I think so. But will there be new whales coming into the market? I think that's the bigger story. Institutions, remember, control most of the capital in the world. Bitcoin is small. $2 trillion seems like a lot to us. You mentioned silver's 4, gold is 30, stocks are 180, bonds are 300 or whatever. These are much bigger numbers, right? Even just a 1% of the global bond market is more than Bitcoin. So if we can get 1% out, we'll double the value. So yes, will the whales come back? Absolutely. But will there be new whales? I think absolutely as well.
Just a few years ago, institutions talked about owning 1% Bitcoin, or simply getting off zero. Today, major firms are casually discussing 4% allocations. That shift is monumental. A 4% position was once considered reckless. Now it's viewed as reasonable, because Bitcoin's risk profile has improved. And when institutions control most of the world's capital, even small allocation changes can have massive price implications.
4-year cycle is a dead man walking. Look, we already theoretically broke it with this pullback. Some people would say no because they're not calendar based. They're based on specific months. But as I look at 2026, I find a hard time imagining we go -60 again, like we did in 2022 and 2018. The forces that drove the Bitcoin halving are so weak now, right? The size of the halving is so much smaller than it was in the past. Interest rates are heading down, not up. Blow-up risk is reduced versus 2022 and 2018 and 2014. I just don't see those as the big forces in the market. When I look at the big forces in the market, I'm looking at institutional adoption, I'm looking at regulatory progress. On the negative side, I'm looking at things like regulatory uncertainty, whether the Congress in the US passes the Clarity Act, and some selling by large existing holders. But I'm not talking about any of the forces that drove the 4-year cycle in the past. So I just don't see why it would repeat. I think the bulls win out this year. I think 2026 prints green, and we never have to talk about the 4-year cycle again. Like the people who are claiming it'll be a 4-year cycle are just expecting a repetition of the past, but with no reason. There's no rationale that they can point to that says this is the reason there will be a 4-year cycle. The other side, this is a reason why the market will go up, has a lot that they can point to. Again, from institutional adoption to regulatory progress to today, we're waking up to the US suing or investigating, or Jerome Powell, the head of, that all points in a positive direction for Bitcoin as well. So I think the positives are just too strong to hold down the market long.
We have 120 billion, if I'm not mistaken, inflows in ETFs alone.
It's incredible. I mean, as you know, I come from an ETF background, used to be the CEO of ETF.com. It's such an outlier. It's not like a little bit better than the second best 1 or 2 year inflows. It's the best by a factor of 10 or 20x. There's just huge institutional demand, and it's building. Again, I raised this point at the beginning, but you have these large wealth platforms in the US that control like 10 or 20 trillion dollars that couldn't buy these ETFs until late Q4, right? If you start to get 1, 2, 3, 4% out of those platforms, that's hundreds of billions of dollars. I mean, it's just a huge amount of money, right? And so yes, it's been an incredible success. We see no signs of it slowing down. In fact, we think it'll accelerate slightly. So it's hard not to be bullish about the pace of institutional adoption. I think you'll see retail come back when we set new all-time highs. So I think if you're looking at what will drive us to new all-time highs, you have to be looking squarely in the eyes of institutional investors, financial advisors, family offices, endowments, those sovereign wealth funds and other sovereign institutions. Those are the people who are going to slowly grind us back towards that 125, 126 all-time high. I think when that happens, if that happens, you'll see retail follow on, and that will be sort of the afterburner there. So I think of retail as a pro-cyclical force. The good news is they couldn't be more out of the market than they are right now, right? Retail interest just collapsed in Q4. We saw record levels of fear in the market. Again, I think they'll come back, but I think they'll come back once we get comfortably above 100K and push towards those new all-time highs. There's an altcoin season in precious metals right now. They were queuing to buy gold. Now they're buying silver and platinum and palladium. They've moved on to the altcoins. They'll eventually cycle back around to Bitcoin. Bitcoin is the king. It at least has a place at the table alongside gold. I think they'll exhaust themselves on this precious metals skew. But you have to think of them, if you're thinking of them, you have to think of them in late altcoin season. That's actually where the precious metal investor is today. I think it's one of those moments where the fundamentals are ahead of the price. I think compared to gold, we are in a bear market. You've also seen, compared to M2 liquidity, which ramped way up post-September, right? We saw a run on a global basis. We're behind where we should be from a global liquidity, and that's been one of the strongest predictors of Bitcoin's price over its 15-year history. So whether you're measuring against gold or global liquidity or other aspects, Bitcoin looks like a value play, right? It's behind the fundamentals versus where it should be. My guess is it catches up pretty quickly. There's also something really interesting about gold specifically, which I think answers a lot of questions for Bitcoin investors. One thing that I've heard from Bitcoin investors over the last year is there's all this buying from institutions. ETFs and corporations are buying 3 or 4 times the Bitcoin supply. How is the price not going up? And actually, there's a great answer in gold, right? If you go back 3 years ago, central banks started buying gold in size. After the US seized Russia's assets post-Ukraine, we saw central bank purchases go from about 400 tons to 1,000 tons of gold. And they did that in 2023 and the price didn't move. And they did that in 2024 and the price didn't move. And they did that in 2025 and the price went skyrocketing to $4,000. And I think what the story that tells you is there was a supply-demand imbalance in 2023 and 2024. There was more demand from central banks than there was ready supply, but there were investors who were willing to fill that gap in 2023, and they were willing to fill that gap in 2024, but they ran out of ammo in 2025, and then the price skyrocketed. I think the same thing is probably true in Bitcoin. These ETFs have been buying more than 100% of the supply in 2024. They bought more than 100% of the supply in 2025. The price hasn't gone up that much because people have been filling the gap by selling. Eventually, those sellers will run out of ammo. And that's where I think we'll see Bitcoin do the same thing gold did last year, which is hit this sort of parabolic increase. I wish I knew the day that was going to happen. I don't. But I do know if this demand persists, it will eventually wear out those sellers and we'll see that kind of gold-like move. One of the reasons I'm optimistic on things like the passage of the Clarity Act, which is the big US piece of crypto market structure regulation, is that you have the crypto czar, David Sachs, coming out and saying we're closer than we've ever been. They will continue to push. I actually think sovereign adoption, even outside the US, is going to be an emergent story in 2026. You've seen even small countries people don't think about, Turkmenistan and others, passing pro-crypto bills and indicating they may be opening to acquiring. You have the opposition leader in Venezuela is a huge Bitcoiner. I think this sovereign adoption narrative, both in the US and globally, could be a surprising theme for 2026 that adds to the traditional institutional buying that we're seeing.
Matt Hougan's core message is simple. Bitcoin's fundamentals are ahead of its price. Compared to gold, global liquidity, and institutional demand, Bitcoin looks undervalued. Short-term volatility is noise. Long-term adoption is signal. The sellers won't last forever. When they're exhausted, price will catch up. just like gold did.